All right, it is now time to bring in the man of the hour, tech trader Sean Udell. Good morning.
Good morning. How you doing, Jim?
I'm hanging in there. I imagine the weather out where you are is a lot better than where it is here in Chicago. Hanging in there.
I know nothing about your weather. I don't follow the weather. Is it? Are you guys having a nasty spell or something?
Yeah, it's pretty nasty. Had a big, and it wasn't all that bad, but it was some heavy snow, and they didn't plow the roads, and it's going to get very cold over the course of this week. So I'm California dreaming, if you will.
It's a little. I think it's a little chilly today. I think the high is only supposed to be like 68 to 72 or something.
Yeah, bummer, dude. All right, so let's get into some of these markets and some of these trading calls that you had, because you had a couple of really good ones, and you came through nicely. I asked you for a couple of potential earnings winners, and you came out with WDC and ADTN, ADNT, and now that we've seen these, the earnings have passed for both of these, what's the course of action as far as how you're handling the rest of what you have on? Are you going to hold these for a bit? Are you going to take some profits? What's your call?
Yeah, well, I mean, I'm gonna on the WDC. I mean, my price target's $88. So, I mean, that's a multi-month, multi-quarter price target. But typically, when these things move, they can move pretty quick. I wouldn't be surprised if it retraces a smidge. I mean, I don't know how it got to, what did it get to 47 or something for a couple seconds. I don't even know how it got there. Maybe there was a big short that covered something at a pretty much the most imperfect price possible.
Well, it had the 48 had the 100 EMA, so I'm guessing that there was a target, or at least maybe a push to
could have
see
done
if
it.
it could trigger some stops above it.
Yeah, my guess is a short had to get out or something. A short had to cover. But I really think I think I described this. It was. I thought the setup was very similar to Micron's last report, except better, because I'm long WDC and I didn't own any Micron, and I think WDC has more upside, but I basically felt it was like, look, 34.35ish is where I was buying it first of all, so I didn't buy it in front of earnings at 40. I was buying it, I was buying it quite a bit lower, and so so my view is at.
Yeah, and I just wanted to know, to be fair, you had this one on the radar at least a week and a week and a half in advance of their actual call, because I had asked you this one and you tossed this one out, so it was definitely ahead of time. So yeah, and I can contest that it was around that 35, 36 area when we first brought it up. So yeah.
But I think the most important thing is, at 34. It's I think it was a full $2 below the 2016 lows, and it's if you know anything about this group, know anything about tech, know anything about the markets, a stock like this to be trading below the 2016 low, which the 2016 low was a very extreme dumb low. So for a stock to actually go below the 2016 low, it was just kind of exhibited just how crazy and how lunatic and how stupid price action got, at the lows this cycle. So into the late year sell-off. So, but no, I think it goes higher. I mean, I don't have a full position. I mean, I fully intend to build this to a full position. Yeah, if I have to do it, here a little bit higher, that'd be okay. I'd rather do it lower. I think we have NVDA. There's going to be plenty of earnings on both sides of the ledger this quarter. I think we're going to have a number of companies that beat, like we saw last week. I think we're going to have a number of companies more. We're going to have quite a few more, more NVIDIAs. By the way, last week we saw some weird action. I just want to bring this up. Like Texas Instruments didn't have a good quarter. I really thought the stock should have been down. I'm actually looking at that short because I really thought the stock should have been down anywhere from 5 to 10 points on that quarter, and instead it was up about 4. And so, I don't know if I'm right. There's anywhere from 10 to 15 points short term in it, and I think there could be more points long-term in it down. That's a pretty expensive chip stock. And so that's a good example. Like we had plenty of reports last week that got bid up that really weren't that good, or I didn't think deserved to go up. I do think Western Dig deserved to go up. Again, I think it's going higher. I don't really see much resistance on Western Digital until about 52 to 55. That's sort of my short term. That's my short. I'll put it this way: on the first piece of good news they get at all. So whether it's an order trend, whether it's some visibility, whether it's a better report, whether it can, hey, they could guide higher before the next quarter. So any piece of good news, I think the stock is 50-55. That's sort of my short term, and I would take some off there for sure.
Okay, but not in advance. So sit tight for now.
No. Yeah.
All right. So what about ADTN?
Haven't sold any of that either. In fact, now this is kind of the opposite. Where I think we had some reports last week. I think that actually had more upside than they probably deserved, or they probably should have gone. Last week was a funny week. Like say, I almost think there was a big short in the semis that kind of suffered a lot of pain. And because there just seemed that the semiconductor action was more positive than I thought it should have been last week. And not that I don't think some of the stocks deserve to go higher, because again, they got to lunatic lows, or at least some of the ones I like got to crazy prices in November and December. But there's still plenty of them that are pretty expensive. But as far as ADTran, I mean, it had a decent little pop, but it didn't. I almost, this is one of those stocks. Like now, one of the things we have nowadays, we have fewer analysts that cover stocks. Period. And with the stocks they do cover tend to be the stocks that everybody knows about. So you might have 38, 40, 45 guys covering NVIDIA. I don't even know if there's 5 guys covering ADTran, or if there are technically. I don't really know how closely they're covering it. And it could be one of these things where even the guys that cover it, it's like gets 1/4 of 1% of their time. But they had some very interesting commentary about Huawei, and the interesting commentary they had was that they in fact, so put it this, they guided higher. I actually think they're sandbagging the guide. I think they base it, and this is what ADTran typically does. I've known this company for a long time. They usually guide about as conservatively as they can. So I think they guided conservatively, but they had some very interesting commentary about winning business from Huawei, or potentially winning business from Huawei, seeing RFP, its request for proposal activity, as strong as they've seen it in many years. Now, some of this was due. Some of this was naturally going to occur because of the telco communication infrastructure CapEx cycle that we're in, as well as 5G. But again, they specifically talked about seeing more, requests for proposal activity than usual, and most of them were basically. It sounded like you could go listen to the exact comment, but it was something like basically winning business or replacing Huawei gear. And I think that's going to happen sort of globally, pretty much everywhere except China. We've seen Japan talk about it. It's going to have pretty much anybody in North America, to the degree they have Huawei gear, they're probably going to either take it out or certainly not renew it. Europe is a little more friendly, especially Germany. But I don't know. I think Huawei and ZTE are effectively neutered, and I think you're going to have a lot of the North America, and maybe even some European. Like this could be a big a tailwind for Nokia too. So, but I favor the U.S. companies. But no. I mean, Nokia could go up 50% just on more business visibility, because that's been a very beaten up cheap stock for a long time. Anyway, suffice to say that I actually think, that last high on ADTran is kind of my target. That $18.90, $19 high, because the company hit that price on nothing exceptionally good. And, there was a time when this stock was considered dirt cheap, 22, 23, 24. It's very cheap. So, I mean, same thing. $10 and change was, I believe, a 2008 low for ADTran. So, again, we see some very silly price action these days in a lot of stocks, and both on the upside and the downside. And, again, I don't think there's any real business fundamental reason that ADTran should have tested the 2008, 2009 low, other than algorithmic pressure to the downside on the tax loss selling puke fest at the end of last year, which is, again, machines gone wild. And, that's a whole nother discussion, but that I think we got to, again, I could argue AdTran probably never should have seen a penny below 15 or 16 bucks, and they went to 10. So that probably gives them more upside in the future. And again, I think short term, 18, 19 is visible. If they have a couple more good quarters, this is a $30 stock. So,
well, AdTran's already at 19.
No, 14.30.
AdTran? ADTN?
Yeah.
Oh,
ADTN.
ADTN,
yeah.
Gotcha.
Yeah. So, again, I mean, this was a cheap stock at 30. I mean, I can't remember the last time AdTran was expensive. Probably 1999 was probably the last time AdTran was an expensive stock. By the way, I'm not even 100% sure they were trading then. I'm going to look right now. Because I hate saying stuff out of school. Let's see. I think they were in 1999. Yeah, they were trading back then. So yeah, that was probably the last time they were an expensive stock. And the company is a much bigger company today than they were then. So yeah, I mean, I think we're going to see a lot of CommScope. Another small long I have, kind of running away. I only have about a 1/4, 1/3 position in COMM. They guided higher today. Mm-hmm. They got really beaten up last year after they bought Aris Corp, which I think is a very good deal for them. They're potentially a strong 5G play as well, kind of a tertiary 5G play, just like AdTran is. Again, they guided higher. I'm gonna hopefully, all these things will sell off. They'll have periods where we'll have 3 or 4 or 5 down days, or a couple weeks of downside action, and these names will all come in again. So, or at least I hope they do, but I think most of them will. But yeah, both these names, I could buy either one of them on a couple down days. So. But yeah, 19, I think, AdTran now is one of these situations I like both technically and fundamentally. So, fundamentals, you get a possible hard turn. You also have, the valuation just got extremely ridiculously dumb. And, now you have a pretty reasonable target. You basically just mark the last high on the chart. And, the stock probably, has a propensity to move to it. And then you could get more news. I mean, more good news out of companies in the space reporting. INFI reports tomorrow, and there's a few companies in the fiber optics and telecom. Corning reports tomorrow morning, for example. So, we'll see what happens. But I'm not too worried about the group. I mean, it's probably one of the groups I'm the most bullish on for this year. I was pretty bullish on the back half of last year as well.
All right, before we get into what may be some other potential earnings plays, why don't we talk about where you think we are in terms of the NASDAQ in itself? So we've seen some volatility, especially today. We're down. Maybe you can talk about NVIDIA a little bit as well, but where are we in terms of where you think the NASDAQ is? A slight pullback and we're going higher, or what's your overall takeaway?
It's been stubbornly strong. Sentiment is starting to mellow out, though. So we went from a very overbought sentiment reading. We're kind of approaching neutral. So we're not oversold at all. We're kind of moving slowly towards kind of a neutral sentiment reading. But here's the best way I can say it. I'm way more stingy on buys now than I was a few weeks ago. So I'll buy something if they attack something or something does a flash move lower. But I'm starting to look at shorts more. Probably the same thing I said last time. Starting to look at shorts more. I'm starting to have my willingness to start putting shorts on is increasing again. But I wouldn't be aggressive with them. It would be more sort of some toes in the water and some hedges to protect yourself, and if we keep ripping to the upside, well, that's fine because I'll make more money on my longs. But yeah, I'm being more stingy, more selective. I'm kind of being more tactical because I got plenty of things that are working. I've got like 90% of my book is working right now. So I don't really what was the great Warren, but as Warren Buffett said, the beauty of this game is we don't have to swing at every pitch we see. And so, whereas October or the November lows and the December lows, almost every pitch was hittable for multiple bases or a home run. Now, I'm waiting for pitches. I think that'd be the best way to say it. So I have to see something have a big down day, or I have to see something have multiple down days. I don't know. So I don't know if we need a lot. I mean, if we had a 2-3% correction on the indices, we could probably be set for another decent little move higher. And I'm not a perma bear. I mean, I've been way more bullish than bearish the last 2-3 years. I don't see a recession at all on the horizon. In fact, I see a probably economic acceleration, which nobody's looking for. So we'll see. But yeah, I think we just need a little peeler. I'd be pretty thrilled with a 3-day sell-off, something like that. That would make me more interested in buying stuff.
All right.
And I don't think the setup for shorting is super good, like it was in basically July through August, or July, August, September of last year. That was sort of like where I pretty much had my maximum amount of short exposure on over that 3-4 month period, and then just kind of waited. So I don't know. I'll know the next sort of taste really aggressively short setup when we get there, when we see it. I think it comes at notably higher prices, not lower prices, though.
All right. One of the names you mentioned that you would potentially short is Texas Instrument, TXN. What's your thought process in this one?
Yeah, that's just. I mean, honestly, they didn't really come down that much. I mean, so. This is arguably one of the more expensive chip companies. Some would say they deserve it. I don't know. It's not like they have a really strong revenue growth. They're more of like a highly valued company out of consistency. And we've seen this a lot more in recent years. So it's like companies with in fact, their forward revenue growth rate next year is 5.7%. And yet, if I line this up, this is literally one of the more expensive semiconductor companies. There's plenty of semiconductor companies I can find that trade at 2 or 3 times sales, maybe even 1.5 times sales. Texas trades at 6 times sales, and that's not even forward sales, that's current sales. So, very, very expensive company. I mean, so this would be like, again, what we see, tons of analyst coverage. There's plenty of people who just kind of pile into it because it's like a bigger component in the stocks or a bigger component in the S&P 500. A lot of passive money's in it. And this is where there's little intelligence in the trading universe. It's this is the kind of stuff that's ripe to get cracked. Just like I was super bearish on NVIDIA at highs, and NVIDIA got cracked, and it's still going down. And by the way, I mean, I've said this before. I think a more reasonable price on NVIDIA is probably around $80 or lower. In fact, I'm pretty sure I was quoted on this is that around 160 to 200. I can't remember the exact prices, but it was way before. It was a good 60 points before the lows. NVIDIA was basically selling at the same valuation as Workday. And so the stock had been cracked to the tune of about 100 points of downside. Yeah, I think it was around 200 at the time. So they were, at highs, they were trading way more expensively than Workday. Well, Workday is a software company with super high margins, super high revenue, or long revenue contracts with a gorgeous balance sheet and a ton of deferred revenue. There's no way in hell NVIDIA should trade at the same valuation as a Workday, for example. And yet it was trading at a huge premium to Workday, and even at 200, it was basically still a little bit more expensive than Workday. Now it's a little cheaper than Workday, but it's a semiconductor stock. Semiconductor stocks shouldn't trade, at 12 or 14 times sales. They should trade at 2.5 to 5. Maybe 6. Maybe 6 is the cap. So, we'll see what happens. But now, where were the bulls with downgrades on NVIDIA at 285? They were nowhere to be seen. They were probably calling for a higher stock price and upgrading stock even then. So they completely missed it. And these things aren't that hard to miss if you have a matrix evaluation and stuff. But sometimes you have to be willing to not be in something that everybody likes. So like I say, I want to make money. I could care less if I own stocks that lots of people like. Same thing. I care less if I short stocks that lots of people think are longs. But yeah, Texas is kind of like a mini NVIDIA. It's not nearly as overvalued as NVIDIA was at the highs, but it's a pretty darn expensive chip company. And I don't see a path for any kind of great growth. So I can find lots of companies that I can even find software companies that have 30% growth rates that have roughly the same price to sales ratio of Texas Instruments. So, I'd much rather buy a software company at 6 times sales with 35% growth than a chip company with 3% growth trading at 6 times sales. So in my book, that's good short.
All right. Did you have a chance to break down NVIDIA's guidance call today?
No, but I don't really need to because, I looked at it. I looked at the guidance. I'm probably the person who's the least surprised person in the world by it because I've been, kind of talking my own book opinion-wise. I haven't liked the stock from 225 to 250 on the way up. So, it's one of these stocks where I think, here's the other thing I think I can help a lot of people with. You have to just look at cycles and you have to say, what tends to do well and what tends to do poorly. The former leaders, so the former leaders of the last cycle highs were FANGs and the broad FANG contingent. And NVIDIA was certainly part of well, in fact, it's even, if you're looking at the 6-letter FANG, it's in the 6-letter FANG. I always kind of call it the FANG plus contingent, which to me is I have a basket of about 15 to 30 names in that group, and they're certainly part and parcel in it. So this is what happens. Again, as I said many times, we talked about this. It's a chip company. It's not a software company. It's not one of the best software companies on the planet. It doesn't have a book of revenues. It doesn't have, there is a software component to their revenue stream, but they're still a chip company. And chip companies are more cyclical, and chip companies shouldn't have software margins. And all the things that I basically warned about NVIDIA are pretty much coming to pass. Now they're dealing with a period of time when do they finally get on the horse, and when do they start beating numbers again? See, that's the thing I don't know. There will be a time, I liked NVIDIA a lot 5-6 years ago. There will probably be a time I like it again, just like there will be a time I like Apple again. But I don't know. This thing's going to have to go through a cycle now where they're going to have to get the bad guys out of the way. They're going to have to get the business out of the way. I don't know. It's possible sometimes companies have a period of time that literally is as good as it's ever going to be for them. And I think we talked about this months and months ago, maybe a couple quarters ago, where NVIDIA got to highs because they went through a period of time where it was a perfect storm to the upside. Usually a company has perfect storms of bad news, but this was a perfect storm where literally everything that could have gone right went right for them, and it all went right at the same time. And so, there might not be another time where you have super strong crypto, which came out of the woodwork, super strong data center, super strong AI, super strong all these things, that they had a leadership position. And by the way, the competitive space is tougher going forward. They kind of caught the competitive space kind of with data center and AI, not sleeping, but they had a multi-quarter lead on that group. I would say that gap now is pretty much closed, or it's closing fast. So I don't know. We could be in a period where we never really see everything line up for NVIDIA as well as it did for them. So getting to highs is going to have to be a long, struggling, arduous task for them. And again, former leaders typically struggle. So usually the thing you don't want to do is buy all the former leaders that led the last highs. Those usually are some of the worst stocks to be in. So, you want to look for the new leaders. NVIDIA's an old leader, they're not a new leader. So, it was a big guide down too. That guide down doesn't seem to me like it's a 1 quarter thing. And they didn't have a good report last quarter either. So, like I say, I'm not really interested in the stock on the long side until 80, and I might not even like it at 80. We'll have to see.
All right. So
doesn't mean you can't. If you're a canny trader, it doesn't mean you can't clip it. But even that, I'd rather clip something I have more of a long bias on. I don't really like clipping, like doing short-term clip the intraday trades, long trades on stocks that I think are structural shorts.
Right. I know that's not your style.
No.
But with that said, you were able to hone in on a couple of earnings catalysts that moved higher, i.e. we already talked about Western Digital and ADTN. So what are some other ones that you may have up your sleeve?
Yeah, well, remember too, I hit Bed Bath & Beyond really well too. So the earnings season starting out great as far as I'm concerned. I call them as I see them. There was nothing today that that's why I didn't have any notes saying, hey, you got to do X, Y, and Z before the print tonight.
But I do know that you've done your fair share of homework heading into this season,
but
and we're about to ramp up.
Usually what I do, in most cases, I usually wait for the report. So I have to really, really like something, or just feel so convicted in the long-term or secular story that I just don't care. I don't care. I'll eat all 100% of the earnings risk for a couple quarters, right? Because I think the power of the brand or the power of the company is going to come through. Like Corning is something I might like. That's tomorrow morning, but I want to see the print. I could have been in Extreme Networks. That's had a pretty good pop off of lows. That's not a stock I love, but that's another stock that just was so stupidly cheap at the lows. I mean, anything under $5, I don't even know why the stock would trade at that range.
What's the ticker on that one?
EXTR is Extreme. I wouldn't be surprised if they have a decent quarter. The one thing I will say about Extreme, I mean, it's got a pretty, for guys that are pure technical traders. And again, I'd wait for the print, but because this is a name, by the way, that is not uncommon, that they pop it, then they peel it, and then hours to days later, it kind of makes the real move, right? And a lot of companies trade like that, but there's no institutional sponsorship for Extreme. There might be for Corning, by the way, GLW. So Corning, again, I want to see the print. I would already be long Corning, but there's one issue. I think Corning's fiber business is going to be good. It's going to be good, and it's going to become great. That's 5G, that's telco equipment, that's bandwidth capex, all that stuff. The problem is that's not the biggest part of their business anymore. It's still a good part of their business, but the glass sales are heavily influenced by like handset device sales, things like that. So they kind of got a strong part of the business that's kind of going to have to, battle the weak part of their business. And then it's just sort of noisy. So maybe TV sales are good, and that might offset handset sales, right? But I'm not going to say I'm a channel expert on TVs. So that's just, I'm pretty good at this stuff, but I can't pay attention to every single nook and cranny. So I'm not going to know all the exact piece parts of Corning's what do you want to call it? Channel checks. So like I said, I would, if I didn't feel that Apple still had another quarter or two or three of pretty sluggish sales, and by the way, it's not just Apple, it's nobody's really buying handsets because they're probably like me. It's like, look, if you waited this long to upgrade your handset, don't you want a 5G enabled handset? I sure do. So I'm going to get a handset later this year. It's going to have 5G enabled. It's probably going to be an Android handset, actually. And so Corning is just, like I say, if I didn't kind of see there plenty of pieces of weakness that could come out, they could. I just don't know. It's not as juicy of a setup as Adtran at all. I mean, if the stock was 22, I'd be all over it, but it's 32-ish, I think. So it's not as attractive. Yeah, GLW. Yeah, 30 and change.
30 and change. Yep.
Yeah. So it's kind of a slow mover anyway. I mean, this one, if you catch this good in front of a print, maybe you catch 3 points. It's in other words, hard to make 20-30% on a pop on this. So you got to be pretty good. I don't think there's a lot of downside. I do like this name, but what I would prefer to do is have enough concern about the quarter. Plus, we kind of have a high market. The sell-off might not be a one-day sell-off, so you get a combination of more market downside. Maybe some other bad news comes out tomorrow morning. Maybe 3M's bad. That wouldn't shock me at all, by the way. If 3M has a bad report. So, hey, maybe I get some help. And maybe the help pushes Corning lower. And I'd really like the stock between 26 and 28 as a long. So that's one. Again, Apple, no play. If I were trading Apple, I'd probably take a short end of the print, but I'm not. Same thing. It's kind of done what I said it was going to do. As you know, I love the stock long term. Was one of my largest positions multiple times in my life. I hated the stock at $200. I mean, to me there was zero reason to be long Apple at highs. And they'd had plenty of warnings. It's kind of like being in Facebook at highs. You had about 2 quarters of warnings that bad things were coming. And yet the people who stayed in it ignored it, and then they got caught. And but now I don't know if there's much of an edge. I mean, once you take 150 or how many 120 points at Apple, 41% down. I don't really, I'm not one to like pile onto a short after it's dropped 41%, especially a company as good as Apple is. So I don't know if there's much of an edge, but if I did have a play, I would play it short. But I don't think it's a good setup in either direction. The only other one, like I say, everything else, like KLA, I got to see the print, Maxim, MicroStrategy, MKSI, I got to see the print on all those. Juniper Networks is intriguing to me. So I don't know how much time you want to spend. Juniper Networks is a very interesting. The stock that I think this could end up trading like is Network Appliance, and that's NTAP. I really liked Network Appliance a few years ago. It was a very cheap kind of old school tech company, but they had catalysts coming. Long story short, people can look at the chart. It's either gone 2.5 to 3x or more. Again, you had a very good company with plenty of IP, plenty of earnings power, plenty of cash flow production capability that got mispriced. I think Juniper's been mispriced for a while. It's not as mispriced here as it was at 22. But yeah, it's still pretty cheap. They might have a pretty good cycle. In fact, I would say Juniper's probably going to come into a cycle that was every bit as good as their cycle, where I think they topped out around in the spring of 2014. So that's one I'm pretty interested in. Same thing. I want to see the print. I'd love it if they missed. I'd love it if they guided lower, and I'd really love it if the machines hammered them. Because if they had a big 1, 2, 3 day drop, I think that would be a very, very low risk long. So I don't know. Same thing. It's about 4 to 5 to 6 points away from where, like if it was 22, 23, I'd be long before the print. And by the way, they might not miss. I mean, they could report something pretty good. So I'll just have to deal with the report. But that is interesting. I do like that. I've got plenty of things with similar exposure that I think I like as much, if not better. But that's a very high quality company selling at a pretty attractive price. And I'll go to Wednesday. I don't want to go too many days out. Let me see what's Wednesday. You got Facebook. You're probably more bullish on Facebook than me, but I haven't been bearish in it pretty much since the November lows. And you could have been long Facebook and done just fine. PayPal was a big former name. In fact, when I first came on the platform, I loved PayPal at $39, more than doubled. It was in my focus list for quite some time. I took it out, replaced it with other things because it's appreciated so much. Probably the stock I'm the most interested in is Qualcomm. But Qualcomm, I don't think Qualcomm's. So they're going to have this is going to be interesting. They're going to have an earnings report. Which they could have good things to say. The problem is I don't think their FTC decision is out. In fact, I know it's not out yet. I don't think it's going to be out by the time they report earnings on Wednesday night. It would be nice. It'd be really nice if we had everything out of the way on Qualcomm. But they're going to report, and nobody's probably going to care what they're going to report. And the analysts are probably going to ask them a bunch of questions about the court case, and they're probably not going to say a word about it because either they can't or they won't. So, like say, that's the company I'm probably the most interested in. Yet we have to wait. We have to wait till the FTC decision. What's Thursday? IIVI reports Thursday morning. That's a stock I really like. I'm long. I don't know if I'd buy it from the print. I've got it. I've been accumulating it for a while. I guess if I didn't have any, I would. Now this is one. So it's at a price that I would have no. Since I'm taking into the print, my belief is if I'm going to own it, I'm going to own this. By the way, I'm not going to own it for the print. I'm going to own this for probably another 3 or 4 or 5 quarters, by the way. So that's my view. If I like something, I'll own it for 1 or 2 or 3 years. I'm not just going to, obsess about if it's got a beat or a miss or something like that. But yeah, that would be the one, probably of everything we just talked about, that's probably the one I'm the most bullish about. Again, you have Apple issues, 3D sensing revenues. So you have an Apple downside catalyst, but almost every other thing that the company is doing, working on, and involved in, buying Finisar, all that stuff, all that should be positive. Again, telecom CapEx cycle, bandwidth speed CapEx cycle, 5G CapEx cycle, all that stuff is lining up in front of them. And they only have one part of their business that's going to be bad for probably another couple quarters, which is 3D sensing revenue, which again will be a very, very strong part of the business, once you get to the trough in handset sales, which I think we're getting pretty close. Again, this might be the low quarter, by the way, but that doesn't mean 3D sensing sales are going to be great, because we got to get to an inflection point where handset sales actually start kind of ticking higher again. So flat at a low level isn't the greatest thing in the world either. But yeah, that's probably the one of all these that, hey, I mean, I'm not doing anything. I won't hedge it, and I would be the most eager to buy that name on some kind of a shock sell-off if it were to occur. Excuse me, which I don't expect. I mean, the stock's cheap enough. If anything, they might have good things to say about the Finisar deal or something like that. So. We'll see. That's probably, of all the ones this week, that's the one I have the most short-term interest in.
All right. So just to be clear, out of all these that we just talked about, the only one that you'd be offering up a potential trade for ahead of the print would be IIVI, and all the rest of them you'd be content to wait till after.
Yeah, and it's because I'm long and I have no fear, interest. Hey, they could take it down. I just don't care. I'll just buy more, right? So, but I also think this stock has been heavily beaten up. May not really look like on a chart, but they had one of the best quarters of anybody last quarter. Now, this has been this thing we talked about. It might be worth going over for new people here. So IIVI had a great quarter. They guided fine. It was like a week or two later that LITE had their big guide down. So LITE is their direct competitor for 3D sensing. So, those two events happened within a very close proximity to each other. I still say, or pretty much know, that Finisar and IIVI is going to end up taking 3D sensing share from LITE, which is Lumentum. So it's just an odd occurrence. Again, if LITE had the same order issue, they would have seen it, I think, in plenty of time, that they also would have guided down. Now, is it possible they guide down this quarter? I suppose it is. But we'll just have to see. I mean, and if they were to guide down, I just don't know how much damage would really occur, because they basically sold off. So in other words, none of the good news that they had on their own has stayed in the price. That was at a $48 level where IIVI had the last of their good news. Well, they've taken the pain with all the other bad news from Apple suppliers warning. So in effect, they haven't warned. They have not. Now it's possible they will, but they have yet to warn. But if they were going to guide lower, they would have guided lower. They didn't guide lower this quarter. So to me, that kind of implies the current quarter is okay. Again, it's possible they guide lower. But so they basically, this is kind of one of those things. They've taken all the pain from all the other Apple suppliers, and there haven't really been optics warnings. Only the Apple suppliers have warned. So they've got no benefit from the good results we've seen in optics. They've got no benefit from their last good news they personally had, or they had as a company, and yet they took all the pain with all the warnings of the Apple suppliers and Apple cutting numbers themselves. So that's, I mean, again, I would line this up. The odds are in its favor. That's kind of how. There's no certain thing, but I would say, I'd say, I'll take these kind of odds, right? And I think how I line it all up, if they do hit it, it's even more attractive, because LITE has been hit hard, but it tends to bounce pretty well. So that's probably how I would view IIVI. If it gets hit hard, I figure the bounce will probably occur pretty quickly. And if anything, I should be long LITE. I mean, I've missed two really good trades on LITE because I'm kind of worried about one more bad quarter from them. But the retrospect, this isn't real. I mean, I was very close to buying the stock at $40. In fact, even 39 one time. I think the first time I was looking at it, I liked it 40.41. It did go to 39, but I almost bought it at 40.41. And then on that December revisit, I came very close to buying it again and just didn't do it. But again, they've bounced. They bounced two times very hard, almost the exact same percentage bounce off of lows. fact, the stock's a little higher than it was at the November highs. So, yeah, I mean, my dream is that they attack IIVI and raid it, and I, you know, build my position further. That's really what I want. But I wouldn't be surprised if the stock trades fine. I wouldn't be surprised if it's kind of a Western Digital or a Micron type reaction to whatever print they produced.
All right, ready to hit some listener questions?
Sure.
Okay, so you already talked a little bit about Qualcomm, and I want you to address this situation because the listener writes in and says you keep on talking about Qualcomm, and that's one of your favorite names. However, it keeps going lower and lower. What's your stop on this one?
I don't. Well, you know, we talked about this. I don't use.
But this is for new listeners.
Oh yeah, okay. So I don't use position by position stops, and especially, I mean, I can if I'm intraday trading, I do, or if I'm taking what I call a short-term swing trade, you know, a 48-hour to a 72-hour swing trade, I certainly use stops. I'm just not that worried. I mean, first of all, like my personal view is that, you know, again, every single position I have, except maybe this one, has gone up 20 to 40% off either the November or the December lows. So, and I called the mother of all January effects. I was positioned nicely short heading into the market downturn. I called all three corrections last year. I don't need every name to work. So first of all, if one of my names, even if it's a favorite name, isn't working, it doesn't bother me. In fact, I kind of want, in any given point in time, I want 2 or 3 names I really like to be going down. Because as I'm selling names or trimming names or raising cash and trimming winners, I got to have something to buy, or I prefer to have something to buy. I would be buying Qualcomm right here at 50.41 if the FTC decision was out of the way. I don't know what that decision is, so I'm going to wait to see that decision. Again, as far as the latest sort of last 4 to 5 points down, I kind of almost think it's funny because there isn't a single Wall Street analyst I know of that they all have the same view as me. We basically all expect the FTC ruling to be poor for Qualcomm. And if it's bad enough, Qualcomm will appeal the case. And so, you know, but again, I don't know of a single Wall Street analyst, I don't know of a single buy-side guy that says you got to own Qualcomm because they're gonna be victorious against the FTC. There's no, so that whole, you know, I didn't even read the short report, but plenty of people told me about it. The report sounds like it's consensus opinion. So they somehow got people to be increasingly fearful about something that's already a consensus view. Again, nobody thinks that the FTC is going to be kind to them. But yeah, no, I don't worry about it. I mean, I just, you know, I'm never going to put all my money in one stock. First of all, number two, the stock's not really relative to itself. I mean, most of my buys on Qualcomm have been between $50 and $55. My biggest buy was at 53, so it's not very far from my cost at all. I sold half of it when it went from the 50s to the 70s, so that was a really nice gain. I made 50% off, you know, my position at the time. So I, you know, see, to me, investing isn't. Some people's view is you're only as good as your last call. Well, my view is you're as good as your last 1,000 decisions cumulatively or more. That's really what investing is all about, what's trading is all about. It's making a series of tons and tons and tons of good decisions, as many good decisions as you can over many, many years, and reaping the rewards of that. You know, so no one stock, no one call, no one trade is going to really affect me very much. But yeah, I like the fact that Qualcomm's down. I hope they rate it. I personally hope this thing sees 42 to 45 and then gives me a sign that it starts to reverse, because that's really what I would like to do to lever this position up. I kind of don't think I'm going to get it, because usually when I want something this bad, the market, I think that's kind of what everybody wants, by the way. I think every huge money manager in the world is salivating over the chance to buy Qualcomm under $45. So I don't know. I mean, I hope it happens, but I kind of just don't think it's going to occur. But yeah, I don't know. I just don't. So maybe it's a mindset. Some people get really focused in and really worried about discrete positions. I just don't operate that way. I understand the mentality of that, but you know, I would say that there's better ways to manage money and better ways to trade. So I you know, I just wouldn't put so much in any one position that if the price, if it's down 6 or 7% from your cost, or in my case is down two points from my cost, I have a hard time viewing that's somebody should be concerned about that. So if you bought the stock at 70, you know, I can't help that much, because that was not a price area where I would have bought the stock, and I certainly wouldn't have recommended that or would have said that. I've always been a buyer of it on weakness. But yeah, you know, like I say, I don't really worry. There's been times I've been in really great companies and everybody hated them. I was in Google when everybody hated it. I was in Apple when everybody hated it. I was in Ciena when everybody hated it. I was in Micron at, you know, at $10 to $14 when, you know, I think the consensus view was it was going to go to $5. You know, it went to 60. So, but you know, there's nobody on the planet where every position and every stock they talk about is going to work. We're going to have misses. It's possible Qualcomm's one of my misses. I would be surprised if it is. If I were to line up my misses, I would say likely, hey, I've missed on Pi. I mean, Pi's actually come back a lot, and I'm still down on it. I've missed on Silica. But so generally, if I'm going to miss on something, usually it's on a more obscure name. It's possible I miss on Qualcomm, but even if I do, I don't think it's going to hurt me very much. So that's the other reason I like it. I think the downside risk is relatively muted. So, you know, I would be surprised if the stock drops massively and stays there. So we'll see what happens. But yeah, no, I just don't share any anxiety on this position. So, yeah, you know, like I say, I hope we get a crack at it in the low to mid 40s. I kind of don't think we're going to, though, because I want it so bad. I talked to lots of other people who are just salivating at a chance to buy it another 5 to 10 points lower. You know, again, we know this, Jim, and you've been around markets for a long time. Usually when everybody wants something, we just don't get it. Yeah, for sure. I mean, the hardest trade is the one that you know, you kind of hypothesize what could potentially happen, and you wait on it and sit on it, and you got to make the decision. It's one of these particular cases. And you even said in Apple, case in point, you were hoping for like 140, I believe. It got down to 145, and you're like, yeah, I was really hoping for it to go down to 140, but I don't think it's going to happen. Well, I'd really like to see 125. I mean, that's again, that's kind of, by the way, it wasn't that far down than from after Apple guided, because we talked shortly after that. No, it wasn't. But no, I mean, but realistically, see, that's the other thing. Like, okay, there's tons of people. Oh, hey, you wait for Apple 100, 125. No way. I mean, yeah, okay. I suppose it could go there. I don't think it's going to go there. I think we've probably seen the lows on Apple or something close. I mean, I think they could have a really bad quarter. Is it tomorrow? I think it's tomorrow night. I'm not. I mean, by the way, look at NVIDIA. There were plenty of people willing to buy NVIDIA when it kind of got down around the prior low. You know, again, I still think this might come to 80. By the way, I've not said Apple. I think Apple's worth 80. I don't. My long-term Apple on target on Apple is 185. It's been the same for about 2.5 years, by the way. Yeah, I mean, even NVIDIA. Look, I mean, NVIDIA's popped pretty nice off the lows. So there's definitely people willing to step in and buy some of these companies. I don't know. I mean, Apple, I kind of 135, 140, I think would be in fact, you'll probably find me, yeah, if I see 135, 137, something like this on Apple post-report, call spreads start looking really good to me. Or even short puts. I might short puts on it, you know. And, you know, do some short put trades, kind of work my way into a long position if the stock gets put to me. Or again, you know, 135, 140, man, that like a 150 by 170 or a 140 by 160 call spread looks I think would look very attractive if we saw Apple with one more big thrust downward. So wouldn't be surprised if it kind of gives up $5, you know, something between sort of one. But by the way, here's what I wouldn't be surprised. If Apple goes back and retests 147 to 150, guess what you have? one of my favorite technical positions. You have an inverse head and shoulders pattern on it. It failed to print an inverse head and shoulders. It kind of it V'd pretty good off that low, even though it hasn't really recovered a whole lot off lows. But it never gave you that pause. It never put in a right shoulder. So I wouldn't be surprised. Markets have a funny way of kind of fulfilling certain things. I wouldn't be a bit surprised if it kind of goes down, trying to puts in a right shoulder, and then it holds. Here's the biggest problem I have with Apple. I just still think it's like 2 to 3 quarters early for a really good move. I just don't think they're going to have a 5G enabled phone. I think iPhone sales is going to be relatively sluggish. They're not doing any M&A, which I'd really like to see them do. So, I don't know. I think this winter, next spring, sets up a much better Apple long. Because I think you're going to have 3-4 relatively kind of benign quarters that they produce. But you give me a crack at 140, then you get a recovery move to 160 or something. That's plenty of points to work with. If I think a stock like Apple has 20, 25 points upside, hey, that's plenty of juice for a spread trade to work really nicely. So we'll just have to see what happens.
All right, let's do these ones kind of quick hitters. So your opinion on these 4 names. I'm going to start with Etsy.
I don't even think I modeled Etsy. So yeah, I can't really talk to that one. Don't really like the chart. But yeah, this is one. If I don't really do deep work on them, I just don't. That's more probably a no comment to me. I am looking at the chart right now. Some people might like this chart. To me, I see a stock that went from 10 to 50, 5-bagger. I don't know. These are all the types of charts that have gotten into trouble. I mean, that's exactly what the FANG charts look like. That's all the cloud stocks look like. That's what NVIDIA look like. I don't know. I guess if I'm going to lean one way, it'd be short just on the chart. But I don't know much about the company. I mean, I know what they do, but I haven't modeled it, so I can't give you a differential valuation opinion on it.
Okay. One that I do know that you know well is CYBR.
Yeah, that was, is it still in my focus list? By the way, I'm going to have a new focus list out this week. I might have taken that out. If I haven't taken that might be removed for my next focus list. I still like the name, but I don't know. I milked this one pretty good.
Well, what separates this one you liking versus Etsy? Because you said you didn't really like the chart of Etsy. This one looks very similar.
To me, it doesn't, though. I mean, 4 years ago, this was a $40 stock that's only doubled.
Okay,
with a
so
lot
I
of
see
really
what you're
good,
saying.
Oh yeah, this is not a 5-bagger. I mean, if I do kind of think the stock hasn't, relative to how much earnings success and how much revenue growth they've had, and how well the company's done, I don't really think the stock has moved a whole lot, frankly. So that's why I still like it, but I don't own any. I sold it. I'm not in it. I'd like to get a pullback in it. I like the name. This one is a lot like PayPal. I still like PayPal an awful lot. There's other things I like better. I mean, something I like. I mean, I'll throw this in. I probably would rather, like, if I were to buy CyberArk at 81, but I'm sitting here looking at Roku at 42, even though I should have bought Roku at 32. But I'd probably buy Roku. That's more my thing. I'd rather buy a younger company with more growth, more explosive upside potential, take a little more risk. It's riskier than CyberArk, likely. But I think right now, with where I'm sitting, I think I'd probably rather buy a Roku than a CyberArk. If I wanted to put a new name or an old name back on the books.
All right. I guess staying on the same theme here, what about FireEye as a potential earnings play?
Now, Fire we've talked about a lot. I still like it. Do they report this week? If they report this week, I need to add it to my spreadsheet. I don't have it as one of the stocks.
I can tell you in just a second. They report February 6th. So
yeah, so they're still a week out or so. Hey, I own this. So I'm long. I've been kind of half right and half wrong. The stock hasn't moved at all on a series of good quarters. I think it's overdue to have a good move up. They can't miss. If they miss, then that goes out the window. But I think, again, they haven't gotten anything out of, the last 4 quarters have been pretty good, and the stock hasn't done anything. So I think this is overdue for a move higher. At the same time, I haven't traded this much, and the reason I haven't traded is because all the volatility has been scrubbed out of it. So stock doesn't move. It doesn't do much, and therefore I don't want to tie up a bunch of money in a stock that's not producing enough movement to generate trades. I'd much rather, trade names like MTSI and IIVI and Redfin and Roku and Sina and Skyworks and blah, 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 all the names I write about. So I like it. I'm long, haven't sold any of it. So I hope to get paid off. And I can value this pretty easily to $30. In fact, I can value it quite a bit higher, but like, why value it higher? Until it goes to 30, it's not going to go to 40. so I'm kind of sitting here with my high 20s, low 30s kind of price target, and just kind of waiting. I hope they have a good. Here's what I hope. I hope they finally have a good quarter and get rewarded for it, because they've had plenty of good news that they haven't been rewarded for. But I said this last time. It's either going to get bought out or they're going to finally start going up on their own. I think that'll what eventually happen to them.
Okay, a couple more charts for you to look at. PAYC.
I liked this company a long time ago when it was a younger, faster growing stock. God, I want to say like $30 or $40. Yeah, I almost shorted this last year, by the way. The stock I probably like better is PCTY, similar vein. So I'd probably favor PCTY first of all. I think PayCom is I would look at this as a potential short versus a long.
All right.
Because that's my view. So that's how I look at it.
Okay. Maybe a pair trade between these two?
It could be. I don't know. If we get a big spike high move on a quarter, which is good, everybody flips out over thinking it's awesome, but it's just sort of so good. Something like that. I mean, it's had a pretty nice move off of lows. I mean, 112 to 143. Their all-time highs. I mean, it's 20 points from all-time highs. That's kind of in that realm of shortability, if you ask me. I don't really think there's no reason to put a lot of shorts on right now, unless we magically just start correcting really hard. I just, again, me, I've been very vocal. When I think it's time to short, I put them on. When I think it's time to call a market correction, I have not shied away. I've called plenty of them in the last couple of years. I'm just not really feeling it. I'm not feeling like there's a big impending 700,000 point move in the NASDAQ. It just doesn't feel like one is coming to me. So I'm waiting for higher prices on names like this to short. I'm glad the guy mentioned this, by the way, because this is not. I wouldn't call this one of my feature shorts. The more I kind of look at this is a pretty expensive stock. I do model this. It's in my spreadsheets. I'm going to add this. I'm actually going to add this to my short list. I've kind of got a preferred short list of, I don't know, it's probably like 28 to 35 names. This is not in that group. I'm going to add it today.
All right, got one more for you.
Doesn't mean I'm shorting it, but it means I'm more likely to short it if it's in that list. So I'm going to add it to that list. So I'm glad the guy asked the question.
All right,
or the gal, whoever it was.
Well, same listener asks about Coupa software, COUP.
Same kind of thing. I used to be long Coupa. Coupa might have been a focus list stock of mine. I mean, I like this thing real cheap. I want to say $25, $27. I was in this stock. Put it this way, at the most, I think I paid for it was like 30. And I think I was in it cheaper. So I nailed this pretty good. Sometimes I don't like to really revisit. So I don't know if he's asking about this as a long or a short. I think they're going to have another very good quarter. I think it's likely that they could kind of have a Xilinx type move or a Workday kind of type, Twilio type move. But I still think any stock that did not take a huge amount of pain in the last correction, I think is very vulnerable. So if you can find a short or a stock chart that looks just like NVIDIA's chart before it fell, or any of the FANG charts before they fell, or any of the chip stocks that got hammered hard, or any of the cloud names that got hammered hard, I would say watch them for shorts. I mean, again, if you want to, if you're 100% Momo player and that's your game, then you're not going to agree with me anyway. So you're probably not listening to me. So, but because there's people that like to buy stocks on multi-year high breakouts. That's not me. I mean, I'm not saying I've never done it. I've done it on names I like, but it's pretty rare. So yeah, I don't know. Coupa is in that short list, by the way, and this is a stock I really like, just like I really like Twilio. But when I really like a stock at 25, still like it at 35, I'd probably still like this up to, I don't know, 50, 55. But you know, when the crowd comes into something that I liked a year earlier, and they, you know, when I was like the lone bull, and then a few more like it, then the smart momos like it. Okay, well, we're getting pretty late now, right? So like, I would argue who now is starting to just come in and go, oh wow, look at Coupa, how good it looks now, and not realized what it was the whole time. So that's just kind of how I line things up. Same thing with sell-offs. You know, it's very likely that when I start liking Apple a lot, it'll be very hated. So, and it's okay if I like it for 3 quarters or 2 quarters, and it's hated. That's fine. I can sit in a stock for a while and wait to get paid, especially a high quality stock. Yeah, I don't know. Coupa, you know, I'm more like, you've known me, I've more wanted to short the Intuits, the Adobes, the IGV components. You know, I was short Micron at high prices. So Coupa, I wouldn't probably put Coupa in like hey, it's one of the immediate things I'm going to look to short. Like I probably like VEEV as a short better. There's a few other ones, and then certainly an Adobe, Texas probably, but yeah, it's up there. It's like say COUP is already in that short list, and I really like the company. I mean, it's not a call on the company or the quality of the company. I just think it's overvalued. It's a dangerous chart because so many stocks took beatings, and so if you're hanging out and you're in one of these stocks where the quote is, oh hey, look at this one, this thing didn't take the pain, therefore it must be a better company and everything else. I see, that's where I take issue. COUP is not a better company than companies that have gone down a lot. Their stock just hasn't gotten hit for whatever reason. There could be a myriad reasons why it's held momentum where other stocks haven't. But usually everybody takes its turn. So I would be surprised if Coupa gets through this period without suffering some kind of correction of their own at some point.
All right, so I'm going to limit this to 2 more. I apologize. I know I got to most of the listener questions, but at some point I have to cut it off. So I'm going to touch on this one. Your thoughts on microchip, MCHP.
Same kind of deal as Texas Instruments, but see, this is a better example. I mean, look at had zero interest in the stock long. Again, could have been a short. But they got hammered. I mean, they went down 40%. so microchip though to me is kind of a tweener. Again, I like Skyworks. If you're going after a big, formerly loved semiconductor company, Skyworks is going to be a strong 5G player. Probably won't get a lot of 5G love for another quarter or 2 or 3, but it is one of my top 3 5G companies. Very high quality company. I would just do Skyworks over Microchip personally. But at least Microchip took the pain, took a 40% sell off. It's had a pretty nice move, by the way. It's almost recovered 20 points. I would say on Microchip, I would need to see probably a couple quarters out of them. I don't hate this company. I don't think it's a short. Don't really think it's a long, kind of a tweener. I just think there's companies set up better. So yeah, I mean, well, I'll just have to wait to see. You know, let me see a quarter or 2 on it. You know, it was a good buy. 20 points ago. So you know, that's where I'll end it with that. I'd be, you know, a 10-point sell-off would be pretty attractive in that name, I think.
All right, so this is.
But see, here's the thing: I'm still not going to like it as much as Micron, Western did, Skyworks, MTSI, various names. So it's not. The growth catalyst, you know, that they had a big growth catalyst, beautiful bull move. I don't know, again, probably 2012 to 2016 type time frame for Microchip. So I don't know. This one feels. I'd probably want to revisit this one after a longer period of non-performance. Probably be a good way to say that. It's sort of like Skyworks. I could have liked Skyworks 2 years ago because it didn't do anything for 2 years. But 2 years ago, I would have paid $95 for it, and that would have been a bad buy. So sometimes you just kind of ignore a stock and give it time and just look at other things. So that's kind of how I'll close it on Microchip. I just think there's other better values, better opportunities.
All right. I'm going to combine these 2 questions into one because they're regarding the same stock, mostly anyway. So, Tech T, are you worried about a secular slowdown in China we keep hearing about? For instance, regarding Qualcomm, IIVI, a couple of names that you mentioned, and then I'll follow up with the next question after you answer.
I'm not really, because one, that's part of the reason why a lot of these reports and a lot of the results we've seen for the last, and remember, when was the top of the semi? I had a great Twitter debate with some. Well, I kind of responded to a Twitter, an idiotic Twitter assumption, and somebody didn't respond back. So somebody said, "Well, the semis have been down 4 months, and the cycle usually lasts 12 to 16 months or 12 to 15 months, and so we got 9 months to go." And I'm like, semis topped out in January of 2018. So he's right on some of his facts on the premise. But he's totally wrong. The peak of the semiconductor cycle was not 4 months ago. The only thing that peaked 4 months ago might have been NVIDIA, and NVIDIA is not it's not the SOX. The SOX is made up of 50, 100 companies, and I'm talking the whole semiconductor group, right? But semis, it's clear as a bell. By the way, the peak in the semiconductors was, well, let's just say it was January to Q1. You just call it Q1 of 2018. That was the peak of the group. As the peak of a lot. By the way, that's why I did have some NVIDIA shorts on back then, and they worked. They didn't work nearly as spectacularly, but they did work. The peak in the semis was about 12 months ago now. So we're kind of getting to that point where I think that's why that's maybe part of the reason we've seen some fairly aggressive semiconductor buying recently. I still think it might be a smidge early. Because I still think most of these companies are going to have 1 quarter of pain, maybe 2, but for sure 1. But that's the best way I can kind of answer that is that the semiconductor cycle peaked in January / Q1 of 2018. It wasn't 4 months ago. Why don't you repeat the question? I answered it, but repeat the question again. Sorry.
Yeah. Aren't you worried about a secular slowdown in China?
Oh, okay, that's good. About? Yeah, no, and the reason I'm not is because, so why did semis peak a year ago? Well, guess what? China's growth, China's semiconductor ordering probably peaked about then. That was within a quarter or two of the Apple peak. That was within probably a quarter or two of the handset peak. Automotive's still been, there's a few areas that have still been strong. Industrial arguably peaked probably in the first half of last year. So no, I guess I'm not worried about it because to me at this point it's old news. If anything, I think China is probably months, maybe a couple quarters away from having a reacceleration. Now, their reacceleration will be helped immensely if we have a firm China deal. If we don't have a firm China deal, they still will have a reacceleration, but it'll be muted. If we get a China deal, they will benefit from the fact that we're friendly and we're doing business with them again. And again, this is one of those things. I mean, I'm not going to make a big political statement. I will say I wanted Rubio to win. I'll put it there. But I totally agree with Trump's view, the Trump administration view on how they're handling China. I don't know if I can, that doesn't mean I like every single aspect and every single strategy they're employing, but there was a great article on Bloomberg about the risk of China dominance in technology over the next 5, 10, 20 years and what the world might look like if that were to occur. And I don't think that's a risk the United States should take. We should make sure we stay dominant in semiconductor, computing, AI, 5G, network technology, internet technology, you name it. It's a very important strategic imperative. So, but yeah, no, I think China's going to reaccelerate. I think they're going to reaccelerate again probably in 3 to 6 months from now. Maybe some sparkles of it or sparks are already occurring. But again, the reacceleration will be far better if we get a China trade deal. But no, I'm not really worried about something because that's something I've kind of been in tune with for the better part of the last year. So what was the next one?
So the next question is back to Qualcomm. Do you have any further thoughts on buying any Qualcomm call options?
No, because I'm going to wait now. I'm going to wait for the FTC decision. And I've got some. And, arguably, I I hate paying call premium. I really do. But sometimes I do, and a lot of times I get paid off on it. I mean, hey, the average call option, 94, 95% odds of all your call premium expiring worthless. My hit ratio on paying option premiums, magnitude's better than that. But it's still a tough game. You still lose on a lot of them. And but no, if I don't hit on those June 60s, then I'll try the Januaries, and maybe it won't be January 60s. Maybe I'll get a lower strike. But no, I'm waiting at this point because I should have waited. Hindsight being 2020, I should have waited until the case was was ongoing, and I would have saved myself 50% or more on those calls. But hey, the game's not over. I don't expect a good FTC decision. It's possible it's a good decision for them. If they have a good report and they have a good FTC decision, I get paid off in a few days. So the game is not over. Just because the price is down now doesn't mean the game is over. But no, I'm going to wait. I'm going to wait for the FTC decision again. I think earnings will help us a little. In other words, I think the earnings report will be more bullish than bearish. The problem is that the decision's not done. So until we get a court decision, I can't say the earnings report doesn't matter, but it sure matters a lot less.
All right. Well, let's leave it there because we certainly covered a lot of ground today. And thank you to all the listeners who wrote in with questions.
Good questions today, by the way. Let me interject one thing. So somebody was asking about microchip. And then somebody was also asking, again, I'm not saying they want to be long. They might be asking as potential shorts. But so if I looked at microchip, COUP, and there was one other one, a name I really, and again, I own it. I've disclosed it, is Spotify. So like something like Spotify is pretty appealing to me. And again, I mean Spotify to me is my odds of being right are way lower on Spotify than I believe they are on Qualcomm. But I do like this. I mean, this is, I didn't like the stock at highs, didn't like it at the IPO. But hey, this thing goes from 200 to 130 and below, 105 to 130. That's pretty attractive. And I like what they're doing. I like the platform. I think this, I think people over time are going to be talking about Spotify a lot in future years. I think I think they're going to end up almost kind of cornering the market in their space. And I think they can expand to another vertical beyond music, actually. I'm not going to give anything away. I don't know anything inside or anything, but I'm pretty good at predicting kind of major tech changes and things. I wouldn't be a bit surprised if Spotify finds another vertical to attack. But I like that. That's just a name. I mean, I'm not saying I'm buying it here, but you give me market weakness, you give me a Spotify going down. I'd rather put fresh capital to that than something like COUP.
All right. Well, all that sounds good. We'll definitely be paying attention for any new trades that you have on. Maybe Spotify's on the radar, but I think the overall takeaway from our discussion is you are willing to wait to see what these earning prints are going to be before really getting too aggressively involved on the long side. Just a couple of shorts that you had on there. Maybe Texas Instrument. Was there another one?
That's a possible. Yes, that was a possible. Well, Apple for really quick traders, I don't know. I just have a feeling that does work as a short. I'm probably not going to do it. I don't know. Maybe look at like the KLA Maxim MKSI group because I bet all those stocks had a lot of big lift last week. Lam did have a good report. That does not mean MKSI and KLA are sister companies of Lam. But what if one or both of those guys report poorly? I mean, it's possible. I mean, just because Lam had a good report doesn't mean KLA and MKSI will. So I think we're going to get tested a lot of times this earnings season. I think what happened last week is I think the reports were generally stronger than people's perception of them was going to be. And we kind of caught a good dose of reports. I don't think every week's gonna line up like that. So we'll see what happens. But yeah, I'm trying to remember Texas. There was one other one. I mean, we mentioned Apple. I think the other one came from a chart question or something. I don't know if there was really an earnings. Oh, maybe ServiceNow. Is that the one? Again, I'm not sure.
We didn't talk about it, but
that might be, again, might set up a Visa. Did I mention Visa? Visa could set up as a short. I don't know. I can't remember the other one.
Well, Visa's trading lower today by almost 3%. So
Visa, MasterCard. I mean, just pull up a monthly chart on Visa or MasterCard. I mean, that's again, they barely got scraped in November and December.
All right. Well, a lot of interesting type of plays. Any particular lottery ticket ones though? Is KLAC the closest one?
That's a good question. See, that's kind of what I was thinking Apple is. Well,
how much downside would there be? You gotta figure there's probably a lot of.
Well, I had a lotto ticket one I was gonna do today, and I was gonna post, but NVIDIA reported, like, what did they report, like a half an hour before the bell?
Yeah,
I mean,
caught me off guard for sure.
Well, AMD reports tomorrow, and I was looking. I think I had priced the either February or March. It's whatever ones were 88 cents, 85 to 88 cents. The puts. They were 20s. 20 strike. It was either the February monthlies or the March monthlies. The 20s were 88 cents, 85, 88 cents. I was going to do them. And then I was sitting there and I'm like, NVIDIA, really? Did you have to guide down? Did you have to guide down 30 minutes before the print when I'm planning on an AMD put trade? Anyway, so that was kind of a lotto, but kind of a not. But yeah, no, maybe MKSI or KLA could be lottos. Because again, I think KLA was up percentage-wise almost as much as Lamb was up on that same day, or over a 2-day period, something like that. If I get a lotto, but yeah, that could be a good one. Here's maybe an easier one. I think Facebook long. I think some Facebook lotto long. However you want to do a lotto, with call spreads or cheapy calls or Friday expiry calls or something. Again, I don't tend to do this because I hate paying call premium. It's like one of my disciplines. I like collecting option premium. I do a fair amount of that. I don't like paying option premium. It's just one of my disciplines, and statistically, they've done a lot of computer back testing over time. And there's a lot of money in collecting option premium, compounding money over time. But yeah, I mean, Facebook, it just kind of, you're talking about a stock hasn't really come up that much. It was overvalued, but it wasn't crazy. It wasn't NVIDIA overvalued. Okay, it's bounced 20 off of lows, but I could argue that. I wouldn't be surprised if they put in quite a bit of earnings and revenue production this year. I don't know if the growth rate's going to be spectacular. It's pretty attractive stock on valuation. Again, main reason I'm not in it, it's a former leader, and former leaders tend to kind of lag and underperform. But sometimes I'll grab them. I just think there's upside. I wouldn't be a bit surprised if in 6 months Facebook is a $175 stock, and I wouldn't be a bit surprised if post-report they could bounce 10 or 15 bucks. It's just, I don't know if they'll hang on to it, by the way. I don't know if they'd hang on to a move to 160, but I wouldn't be surprised if they're trading around 160. So lottos, Friday lottos, the Facebook long might set up pretty good. Again, I probably won't do them, but you asked the question.
All right. Well, let's leave it at that. We certainly have a lot to digest, and we got a lot of earnings due out over the course of the next couple weeks. So we got definitely some more time to talk about these and see how they play out, and we'll definitely touch back on these when we talk again. As always, Tech T, thank you so much.
Take care.
You too.
Always good to be on. Thanks.
All right.